Hello everyone. Welcome back to another episode of our economic analysis here on Boss Economics World, shockwaves political economy. I'm your host, bringing you yet another hard-hitting, no-frills look at the failures of government policy and how mismanagement is dragging the economy into a downward spiral. Today we are tackling a hot issue you've been hearing about everywhere. London's housing market is starting to crack, and it looks like it's only getting worse. Increasing taxes, growing economic pressures, and missteps by policymakers are leading to a steep drop in demand for homes. What's going on, and what does this mean for you? Let's dive into it. It's December 2024, and London's property market is showing a sudden surge in homes being listed, specifically, smaller properties. According to Rightmove, in just 4 weeks leading up to December 7th, there's been a 20% surge in listings for homes with 2 bedrooms or fewer. Now why is this happening, you might wonder? Take a wild guess. Tax hikes. Yes, you guessed it, a tax increase is looming, and homeowners are rushing to sell before it hits in April. There's nothing like the threat of a new tax to send everyone scrambling, right? What we're seeing here is name your price desperation. People who own starter homes, in these high-priced areas, are trying to capitalize on the market's current momentum so they can dump their properties and jump into bigger homes before the window of opportunity slams shut. And when we're talking about London and the South East, 2 of the most expensive markets in the country, that's no small feat. The sad reality is that these sellers are not just moving up the property ladder in an organic, healthy market, they are afraid. Afraid of being stuck with even higher costs once the door is closed. Historically, first-time buyers have been exempt from paying stamp duty on the first £425,000, $537,000, of a property purchase. But in April 2025, that threshold will plummet. As it often happens with political short-sightedness, all these tax changes are coming while the housing market screams under months, if not years, of accumulated pressure from inflation, rising interest rates, and affordability falling through the floor. And this is the same government that said it was making homeownership more accessible. Here's the irony, they're choking off the very market they claim to be helping. Who on earth thought raising tax thresholds would stimulate growth? The message is clear, get in or get out while you can, because when April arrives, new homebuyers will be paying through the nose. Now, even though we're seeing this flood of new listings hitting the market, there's no guarantee that demand will keep up. Rightmove's Tim Bannister pointed out the obvious, while this frenzied selling has driven market activity in recent months, the future's looking grim. Demand could fall off a cliff after we get past Q1 2025, creating a cliff edge. It's easy math, folks. The moment that stamp duty gets hiked, prospective buyers, especially those looking at first-time homes, will take a step back. And with good reason. This is crucial because first-time buyers are the heartbeat that keeps the property market alive. If they retreat, the wheels start falling off everywhere. By disrupting the property chain, resale properties for mid-segment buyers start stalling, and eventually, the top-tier luxury market faces spillover. In short, a housing slowdown like this has ripple effects that can shake the entire economy from top to bottom. Adding to the mess is, of course, the situation with borrowing costs. Sure, the Bank of England cut borrowing rates this year, but what do those cuts mean in real terms when inflation has decimated household purchasing power? Despite those cuts, the reality is that fixed-rate mortgages are still hovering above 5%. Remember, back in the golden days, pre-pandemic, you could get a fixed mortgage for as low as 2%. Now, 5% may not seem extreme, but when your wages haven't kept up with inflation and when housing costs in London are some of the highest in the world, that 5% feels like a mountain to climb. We all know that mortgage rates, in combination with stagnant wage growth, are the straw that may very well break the camel's back. And it's not just about mortgages. Everyday cost of living inflation has been eating into disposable incomes across the board. Food, energy, gas, you name it. When a larger chunk of household income is going toward essentials, there's less left over to save for a deposit on a home. These conditions make it nearly impossible for an average citizen to consider homeownership as a viable option, pushing affordability further out of reach. According to data from Halifax, the UK's largest mortgage lender, affordability is stretched to its limits. Back in 2022, the average home price was already 8.3 times the average salary. That number has only grown with stagnant wages and rising prices. Banks are tightening lending standards as well, leading to fewer approvals and a much tougher process for those trying to buy their first homes. But let's not forget the political dimension. With Labour poised to introduce their budget soon, all eyes are on them. The question is, will Labour's tax hikes overshadow any potential relief for first-time buyers? Or will this budget become just another nail in the housing market's coffin? Optimistic Labour supporters may point to promises of more affordable housing and plans for greater economic support, but let's be real. Governments across the board often talk a big game and deliver little. And, with employers already holding back on vacancies and scaling down pay increases in preparation for massive payroll tax hikes, we see what's happening, a demand squeeze paired with a supply glut. As economic pundits from the Recruitment and Employment Confederation have noted, companies are buckling in anticipation of labor's policy rollouts, meaning the job market isn't looking so rosy either. Less job opportunity plus less income growth equals fewer home purchases. So if it's getting tougher to buy a home, where do people go? You guessed it, the rental market. And we all know what happens when there's a sudden rush of would-be buyers pivoting to renting instead, rents start skyrocketing. According to data from Zoopla, rents have already shown an 8.5% year-on-year increase in London for 2024. That's insanity in and of itself. The pattern is straightforward, the demand for homes softens due to the aforementioned tax changes and rising interest rates, causing more people to rent, thus allowing landlords to jack up rents. Renting, which was once perceived as a temporary phase before homeownership, could soon become the inescapable norm for many. The government's failure to manage both homeownership and renting leaves renters stuck in a cycle of unaffordable housing, without even the benefit of ownership at the end of it all. And unless something changes dramatically, this squeeze will only get tighter in 2025 and beyond. Here's where it gets even riskier. As history has taught time and again, particularly during 2008's global financial crisis, a housing bubble isn't always obvious until it bursts, wiping out trillions in value and leaving economies limping. Rightmove has projected an optimistic house price growth rate of 4% in 2025 if mortgage rates start declining, but can we really count on that? Could the steep correction that looms on the horizon in 2025 mark the start of an uncontrollable collapse that could mirror the systemic risks we saw in the financial crash? It's anyone's guess, but the Bank of England's strategy of keeping a cautious approach to easing interest rates is revealing their concern. If home prices start cratering, expect widespread disruption across industries, from construction and financial lending to consumer goods, all of which are tied tightly to homeownership and spending trends. So what's the answer? Here's the thing, there isn't a clear way out unless there's a fundamental shift in how housing policy is managed in the UK. You can't keep tweaking taxes and tinkering with borrowing rates and expect a long-term solution. Housing needs to be tackled head-on. Otherwise, we're going to see a vicious cycle of unaffordability, buyers squeezed out, rents rising, and higher taxes on an already fragile market. The next few months will be telling. If the government doesn't step in with some radical adjustments, the price for their inaction will be paid by everyday Brits. Institutions may continue to profit as prices stagnate or decline slowly, but for the average person, homeownership, long heralded as a British dream, will slip further out of reach. Governments plan for political cycles, but housing problems run on economic cycles. And right now, thanks to poor policy planning, a heavy dose of political incompetence, and the poisonous mix of inflation and wage stagnation, London's economy is teetering on the edge of a housing crisis. Is this déjà vu from 2007 all over again? Only time will tell. Thank you for tuning in. This has been Boss Economics World with our breakdown of the London housing dilemma.